Tasty funding to open and fund a restaurant. Look, maybe you're looking to start a restaurant. Maybe you already own a restaurant and you like to be able to get money to help the restaurant thrive. Maybe you've tried to get approved before and been denied. Maybe you've gotten approved but don't like the terms of the money that you've gotten. Well, today I am going to show you over 10 different ways to get money to start a restaurant or to grow an existing restaurant. I'm going to show you how to get money for a restaurant, even if you have bad credit. I'm going to show you how to get money for a restaurant, even if you are a startup, even if you're in a high-risk industry, even if you've been turned down before. I'm going to show you how to get approved. So by the end of this training, you're going to know over 10 different ways to be able to get funding for a restaurant. You're going to know how to get approved, where to get approved, the kind of interest rates and money you can get. You're going to get it all. So let's dive in. We've got a lot to cover today. So look, it's definitely an interesting time to own a restaurant, right? A lot of restaurants, bars, and people in the service industry have taken a pretty big hit with COVID. But what also is interesting is that we've seen a lot of new opportunities present themselves that we've never seen before. A lot of restaurants right now are doing more business than they were before because they're able to expand into new areas. We're seeing delivery, we're seeing takeout, we're seeing outdoor dining options. Okay, and it's really expanded the way that they do business. Down here in Florida, we've seen a lot of restaurants actually expand out into the streets, expand out into the parking lot, and create this outdoor experience and area where people now love. We've seen other places go to mobile, and they've actually taken their catering trucks, and they've started to actually go out and deliver certain amounts of food from those catering trucks in neighborhoods. And again, create all this blue ocean and change the landscape of really how restaurants have offered, including even new niches that have been created as a result of what's happened with COVID as well. So look, if you love to cook, if you love to eat, if you've ever thought about getting into a restaurant before, it's actually a pretty interesting time to do so because there are so many new blue ocean opportunities. But you need capital to do so. You need capital to get a business off the ground, especially a restaurant. You need capital to grow a restaurant, and your success or failure in large part depends on your ability to be able to access that capital. Now, you can get money from a bank, but it's pretty tough to do and almost impossible to do when you're starting the restaurant. So where else can you go to get money? Well, a lot of these options we're going to dive into today. So let's take a brief overview. Okay, 401k, stocks, bonds, IRAs, other securities can be used as a form to get capital. You can get commercial real estate financing to refinance a building that you're in or purchase a building that you want to purchase. And I'll show you how to do it with no money down in this training as well. Equipment financing. I'm going to show you today how to get this even as a startup. I'm going to show you how to get it even when you have bad credit. Private money. A lot of people can't get money from lending institutions. Why not look at private individuals? We're going to unpack that in today's training as well. SBA funding, even microloans to help you get your business off the ground, and other SBA funding where you can get 20, 30-year terms with very low interest rates. So another great option as well. And then there's purchase order financing. There's merchant cash advances, revenue lending. This is money you can get in 72 hours or less, even if you have horrible credit. I'm going to show you how to get that done. Cash flow financing, building business credit. Anybody can get this from the startup, and it's the key to start letting your restaurant fund itself. I'm going to show you how to do that as well. And we've got a credit line hybrid program we'll dive into, talk a little bit more about, where you can get up to $150,000 in credit lines at 0% rate, no doc, even as a startup business. So these are just some of the options we're going to unpack today during this training. And you're going to know by the end of this how these all work, how to access the money, where to go to get it, rates, terms, everything else you need to know. Chili and Veronica, thanks for tuning in for Facebook. I appreciate everybody tuning in. Tell me if you have any questions along the way, and if you're getting value from this, like and subscribe. So let's talk about 401k and securities-based financing. So I had a client of ours that actually owned a restaurant bar. He was trying to get $25,000 worth of funding, and he couldn't get it from his bank. So he came to us, and we ended up getting him $750,000 in funding. How's that possible? How does somebody go from not getting $25,000 to getting $750,000, $750,000? The answer is 401k, stock, bond, securities financing. With this kind of financing, you could basically leverage the stocks, the bonds, the IRA or 401k of yourself or somebody else to help you get money. Okay, and it really gives you a lot of flexibility because you can get loans, You can get credit lines with this program. Your personal credit quality really doesn't matter. You don't need cash flow. You can get it as a startup. This is the most common type of funding used when people go in as partners into a business. Now, with 401ks and IRAs, you basically, if you think about it, instead of investing into other companies like you do with the 401k, you're just redirecting funds and investing in your own business. And you could do this with no tax penalties. If you have stocks and bonds, well, you can borrow as much as 90% of the value of the stocks and bonds. You still earn the interest. You still get the return you normally would. They're just kind of like a placeholder. They're just serving as collateral for you to get a low interest rate credit line, 5% or less. And the nice thing about this program is even if you don't have stocks, bonds, 401ks, or IRAs, you can get it from somebody else. You can go to a family member, you can go to a friend, you can go to a potential investor. You could tap into their assets and be able to get a loan or working capital credit line using those assets, very low interest rate, 5% or less, to start a restaurant or, again, to grow that restaurant. So a really good way to go. 75% of business owners get money from family and friends to get their business off the ground. It's way easier to tap into somebody you know's assets like this, where the only way they lose is if you default. Then they would take that asset than that person just giving you cash. They have a lot more to lose by just giving you cash in hopes to get it back. But if they leverage one of these type of assets, it's easier for them to be able to leverage it to help you. And it's easier for you to get the help you need by going to those people around you that might have these kind of assets. Coco, thanks for tuning in from Facebook. And Rahita, thanks for tuning in as well. I have investments in an IRA now. This is a great way to go because with this program, you can take those assets, not pull them out, still keep them in the IRA, keep the 401k, these keep the stocks, bonds, still earn interest on stocks and bonds. But yeah, again, just leverage them to be able to use the money. Look, some of the best investment strategies I've seen basically use money that let's use whole life for an example, not to get too deep down a rabbit hole, but there's a lot of people where you have a whole life insurance policy and you can actually borrow against that. I know people that entire investment strategy is borrowing against the whole life policy, getting the interest, paying the low interest loan, and then investing that money to get a higher rate of return. It's the same thing here. You can still earn the interest off stocks and bonds, off these type of investments, and then you're also leveraging them to run a business to make even more money. So it's really a smart thing to consider. And Lee Rashia says, my check system needs repairing. That's great info to know. I'm glad that you know what check systems is now and you've been able to access your report. And keep in mind, anybody that's working with us here at Credit Suite as a client, we help you get your check systems. We help you get your LexisNexis, and we help you repair and fix those as well. So some things to consider. And also check out creditsuite.com/check systems, because there is all the links you need to put fraud alerts on your report and everything else. So again, a lot of cool things that you're able to do with 401k, stocks, bonds, IRAs, using as collateral. And I won't jump into qualification because it really just comes down to having $25,000 or more. If you have $25,000 or more in stocks, bonds, 401ks, or IRAs, you could typically qualify. Now, securities-based financing is a little bit different. It's similar, but you're using stocks and bonds. And again, with this, you're able to borrow as much as 90% of what's in your stocks and bonds. And with 401k and IRA financing, you can borrow as much as 100% of what's in that 401k or IRA. And again, there's no tax penalties. So you're able to get this, store an interest, and not pay any kind of tax penalties. So some things to consider there as well. Let's talk about commercial real estate financing. So commercial real estate financing is where you can get the money to refinance a building you're already in, or you can actually use the money that you need to buy a building that you're already in. So this is for acquisition, it's for development, it's for construction of properties that you can actually rent out. You can occupy part of the space, rent out the rest. You could refinance the space that you're in. Look, if you're going to start a restaurant, if you're going to go to a restaurant, well, you need to have space. You need to have a commercial building. You're not like a lot of services businesses that can actually work from home. So you need to get that building. Now, you could rent the space. You could lease the space. That might be the way to go in the beginning. But with this commercial real estate financing, you're oftentimes able to buy the property and pay less money than you would by renting the property. So once you know your restaurant's going to succeed, you've been in business a year, maybe you want to, even as a startup, then you really want to consider buying that building. And commercial real estate financing is how you can do that. It's basically where you get a mortgage against the property, using the property as collateral to debt, as collateral for the debt. And then in doing so, you can actually own the building versus actually renting it. So commercial real estate loans are often made to business entities, not individuals. So you can even get some of these without a personal guarantee. but that entity needs to have a financial track history. So you're going to want to build some of your business credit, especially if you want to get away from those personal guarantees. Okay. And you're able to get approved even with bad credit. 500 type credit scores, you're able to get approved. You can get approved for many different kinds of financing, oftentimes up to $20 million you're able to get financing for. You're also able to get approved without even having without having a lot of other assets that you may need. The real estate itself can serve as collateral. Now, there's 504 loans from SBA. There's private investors. There's bridge loans. There's all types of commercial real estate financing you can get, but typically you can get as much as about 80% financing against the property. And if you don't have the 20% to put down, well, then you can get that from other options we're going to talk about today. And we do that with a lot of clients. We help combine different kinds of funding where you might need a down payment for this, but you can come in and use another kind of funding to get your down payment to come in with little to no money down. And again, we helped the client the other day come in and they were paying like $10,000 a month in rent. We helped them buy the property that they're in with no money down because the money they needed, we got other financing to be able to cover. And then they actually ended up with rents that they're collecting from the property were $16,000. So they were paying 10. Now they have $16,000 worth of rents coming in. So now they're actually profiting in a scenario where it used to cost them money. So many different reasons to buy commercial real estate or refinance commercial real estate. But when it comes to the restaurant industry, you need to have commercial real estate. And this is something you really need to consider because you could buy or refinance a property and even to turn it into a profit center if there's other space that you can rent out in that actual location. Now, equity crowdfunding is yet another way to be able to get money for a restaurant. And equity crowdfunding basically is where you've got individuals coming in and raising money through crowdfunding platforms, but you're giving up equity in your business in exchange for the money. So there's two ways to borrow money. You can do debt financing, which means you take on debt that has to be paid back. You can give away equity in exchange for the money. That doesn't have to be paid back. It's just you're bringing in another owner. So it's something to consider. Selling stock in your business through equity crowdfunding. You can go through crowdfunding platforms, and we're going to talk about a lot of different ways you can access crowdfunding. And then in doing so, you can raise money from private individuals who would like to have small ownership interest in your business, but that's not money that has to be paid back right away. So it's great when you're getting a restaurant off the ground because the nice thing is that, you need 1 year, 2 years to pay as minimal payments as you can until you start producing a consistent customer base and before your revenues become consistent. So this with equity crowdfunding, you don't have to pay a bunch of money out of pocket because you're not financing the debt like you are debt financing. We have to make payments, and you actually could be bringing in equity partners that could help you grow the business. So, the entrepreneur raising the capital has total control over the offering, including what to sell, how much, at what price. So again, you might say, well, I don't want to sell equity in my business. Well, you control that. You control what you're selling. You control how much stock you might want to sell, depending on how much money you want, at what price. All of those things are 100% in your control. So it gives you a great way to get money, and it gives you a very flexible way to get money as well. And these are the top 6 crowdfunding platforms that I found that can help you. And these are very big, a lot of these on restaurants. So these are what places you can go to get money through equity crowdfunding and through crowdfunding in general to be able to raise for restaurants. Crowdfunder is probably the biggest. Fundable, CrowdStreet, a Real Crowd, Fundrise, and Well Funders. You might want to actually take a screenshot of this. It's worth your time to do so because you could probably search for hours online and not find the top crowdfunding platforms that you're going to want to look at. These are the 6 top platforms that you're going to definitely want to look at. And Jafar says, I know you guys help out with business credit, but what about personal credit? Personal credit isn't our world. We don't deal with consumer credit. I've got a great book that was written on how to fix that, but there's a lot of other reputable companies out there that you can check out. And if you need a referral, give us a call and we'll refer you to somebody that can help you in that space. Divine Wealth Principles, what's up? Thanks for tuning in. I appreciate that. And Rashida said, so you have to go to the bank and ask for a loan against your IRA? You don't. You can get in touch with us and we'll put you in touch with a company that does 401k and IRA financing. Most of the stuff we're going to talk about today, actually almost all of it except for SBA loans, is not offered from your bank. These are alternative funding products that are offered through fintech or online lenders. And we can definitely refer you over to multiple sources that can help you with 401k and IRA financing. You can get approved at creditsuite.com/get funding. That's creditsuite.com/get funding. or give us a ring. Our number's on the bottom of these slides. And in doing so, we will be able to put you in touch with somebody that can help. But your bank does not offer most of the stuff we're going to talk about besides SBA. So let's talk about equipment financing. Look, when you own a restaurant, you need to buy equipment. Typically, you have huge ovens. You have many things depending on what kind of restaurant you actually are. Okay, you might have, like, if you are a pizza restaurant, you might have one of those huge pizza ovens that you need to buy and build the bricks around to make it awesome. There's a lot of different kind of equipment you're going to need. This is one of the biggest expenses you have when you get a restaurant off the ground. Maintaining the equipment is yet another big expense. So with equipment financing, you can get this with bad credit. Credit scores in the 500s. If you've been in business 1 year, you can get equipment leasing. Equipment leasing is cheaper, more affordable than equipment financing. And if you already own equipment now, free and clear, you could borrow against that with what's called equipment sale leaseback. So there's 3 different ways you can use equipment wisely to start a restaurant or grow a restaurant and get the funding you need. Equipment financing, great way to finance new equipment. You can get approved for as little as first and last month's payment down. And again, you can get some of these other funding options to cover your first and last month's payment. Equipment leasing, 1 year business requirement, a little bit better credit, a little bit better terms. And if you already own equipment free and clear, or somebody around you does, and you want to leverage that to get cash, then you can go with equipment sale leaseback. You can get approved even as a startup. You can get approved even if you have crowd or credit issues. Typically 24 hours to get approved. 620, 640 scores where a lot of the times they like you to be. But again, we help people into the low 500s to be able to get this kind of financing. Now, private money financing is still another way to go. You're getting money from investors instead of actual lending institutions. And these investors kind of make up their own rules. And there's investors out there that just invest in restaurant concepts. So private money is kind of an easier way to be able to get the money you need to get a restaurant off the ground or grow a restaurant. It's easier than what you're going to find with most fintech lenders. You can typically get approved for upwards of like $2 million in funding, depending on what you need. They typically would like to see that you have some kind of revenue established and average credit. And if you have that, then there's a lot of people in the private money space that will gratefully loan to those people in the space because that's what they do. Now, you can also get a private money financing from marketplaces, from actual angel investing networks as well. So let's not forget about that. You can get money from private individuals. There's also a lot of angel investing networks you can go to be able to get capital that's easier than Fannie Mae, Freddie Mac, VA, HUD, all those other places that you may be able to get money from for mortgages. You can even use private money to be able to get a real estate financing as well for the building. So a lot of options there. Now, SBA funding is a great way to go. And I've done a presentation earlier you could check out on our social channels of 10 different types of SBA financing that you can get. Now, this is something you're going to typically get from your bank, and you're not going to get it as a startup unless you get what's called an SBA microloan. SBA microloans go up to about 50 grand, low 600 FICO score requirements. You can get them as a startup business. The rest of SBA is typically going to want you to have 2 to 3 years worth of tax returns. And if you have that, you can get SBA 7A loans, which basically can be used for multiple different types of purposes. You can also get SBA cap lines, which are actual credit lines you can use for many different purposes as well. And don't forget, right now, you can still get the EIDL loans, the EIDL, or what's called EIDL from those inside SBA. And the EIDL loans will give you up to $150,000 for an existing business. So if you're a restaurant right now that's been hit with COVID or hit by and affected adversely by COVID, don't forget, you could still get a $150,000 loan at 3 3/4% interest, amortized and financed over 20 to 30 years. It's an insanely low payment. You can still get those loans. You can get them directly. Go to SBA. You can get them directly from the Treasury. And if you need help with that, you can give us a call. We'll direct you to an SBA source. So the EIDL loans are really low interest, really long term. You can get up to 150 grand. And again, we've talked about SBA 504. SBA 504 loans are used for real estate. SBA 7A loans are used for general purposes like working capital, just the fact that you need money. Now, for loans over $350,000, they're going to definitely require collateral. Actually, over 25 grand, they typically want collateral. And over 350 especially, they're going to collateralize basically everything that you have. Now, SBA will guarantee as much as 85% of the loan up to 150,000, 75% of the loan above 150,000. And what that means is it means they make it easier for banks to give you the money because they're guaranteeing the loan in case of default. And typically, even you can get approved in 5 to 10 days if you do an SBA Express loan with an SBA Express lender. You can typically get approved in 72 hours or less. Now, I mentioned cap lines. There's basically 4 different kinds of credit lines that SBA offers. Seasonal for seasonal businesses, contract for contractors, builders lines for builders, and working, which is kind of like a working capital. It often has to do with people that are extending credit with terms to the people or to their customers. So 4 main different kind of cap lines, and these can be cap lines, they can be credit lines, they can also be loans as well. So you can consider getting loans or credit lines from SBA. So some options there as well. As I mentioned, SBA Express, up to $350,000. SBA guarantees less money, but with this, you could typically get approved in like 72 hours or less. So way faster than what most SBA loans are. We talked about microloans as well. You can get approved for up to 50 grand, even as a newer business, even as a startup business. This is one of the only programs from SBA where you get the money direct from SBA. You don't even get it from banks. You get it directly from SBA. And you might have to have some kind of collateral, again, depending on what kind of credit you may have. But if you're getting a restaurant off the ground, you want to look into microloans because this is a great way to get money to actually start a business. And Chili says $2 million for restaurant funding. Yeah, you can definitely get that from many different places, private investors, and you can get that from SBA as well. Chili says SBA terms for 10 years. You can get 10 years terms. SBA terms will go as far as 30 years. So depending on the risk, you can get as much as 30-year terms, which really make your payments affordable. Chili indirectly here makes a good point. A lot of people are concerned with interest. You should be concerned more with term than interest, because if you want low payments, how long the loan is for is more important than the interest you're going to pay. Interest is tax deductible. We write it off at the end of the year. We don't care. But what we do care about is the term. If I can get a 10 or a 20 or a 30-year term, that's what's going to give me super low payments. Let me give you an example. Credit Suisse borrowed $75,000 on a merchant cash advance and had to be paid back in 3 years. $75,000 in 3 years. Our payment was $9,000 a month. We got an SBA loan for $325,000. So that's like $250,000 more, okay? And our payment was less than $5,000 a month because our term was 30 years. So we got $250,000 more in money, and we paid half of the payment because our term was 30 years versus 5 years. That's why term matters so much. Term matters more to your payments than anything else. So you want to get a long-term loan is very important. And Shirley says, do I need good credit for SBA microloans? You don't for microloans, but SBA will want you to have good business credit and good personal credit when it comes to getting their other kind of loans. You even need to have decent credit to get the IDO loans, the IDL loans. So yes, you do need pretty good credit to get most SBA loans, but not the microloans. It's a little bit easier. So purchase order financing is another way to go. Look, when you start a restaurant or own a restaurant, you got purchase orders. You need to go buy things to put in your restaurant, but you might not have the cash on hand to buy those things. So purchase order financing basically is a way that you can get the money you need to fulfill purchase orders and get the stuff you need. Then as you get those purchase orders fulfilled and sell whatever it is you're selling, you can then get the funding against that. So if you have outstanding purchase orders, just know you can get financing for as much as 95% of that purchase order, which makes it a lot less money out of your pocket. Only 5% of it you need. Whereas if you don't have purchase order financing, you got to put 100% of that cash in. So with purchase order financing, 95% of what you actually are filling or buying the purchase order for, what you're agreeing to pay, can be covered by the lender. That means it's only 5% down from you. So way easier to get this kind of payment. And it kind of ties in with account receivable financing as well. So you can get approved typically for about 20 grand, sometimes higher, but a lot of purchase orders are less than that. And all you really need to get approved for is valid purchase orders. You can get approved even if you have credit issues, even if you don't have a lot of revenue. Now, speaking of revenue, if you do have revenue, well, then you want to look at merchant cash advances. Okay, so merchant cash advances is a great way to go to get money, because with merchant cash advances, you're basically using the fact that you have merchant transactions or credit card payments coming in from your customers, which you obviously have as a restaurant, and you're leveraging that to be able to get money. So just the fact that you have your customers paying you by credit card, which you need to be doing as a restaurant, you're not going to survive. You can use that. If you have $5,000 a month in revenue in 6 months time in business, you can use that as collateral to be able to get financing. Now, it's not really a loan. You're basically selling future credit card sales But again, it allows you the opportunity to be able to let your customers pay with credit cards. And then in doing so, you can leverage that to get financing. No application fees. You can get approved for $50,000 or you can get approved with revenues of about $50,000 a year, 24, 48-hour approval and funding. And again, even if you have horrible credit, you're still able to get approved. So this is great financing for high risk, shorter term in business, bad credit scores. This kind of financing will work for you really well. Now, cash flow financing is very similar to merchant cash advances. The difference is that cash flow financing looks at all money deposited in your bank account, not just credit card sales. So when you have a restaurant, people pay you with cash. Most don't pay by check, but people will pay you with cash. So revenue lending looks at all your cash and credit card deposits, and you can leverage those to get money. Merchant cash advances, or MCAs, only look at credit card sales. But one of the other differences is that merchant cash advances are easier. You can get approved with 6-month time in business, $5,000 a month in revenue. Cash flow financing, they usually want $10,000 a month in revenue, 1 year time in business. But again, as a restaurant, if you have a lot of people paying with cash, you want to go the cash flow financing route, because with cash flow financing, you're going to get more money because you're able to leverage the cash deposits in your bank account, not just the credit card accounts. And again, with cash flow financing, you can get approved with sub 500 credit scores. You can fund in 72 hours or less. It's perfect for higher risk industries, like restaurants are considered to be higher risk. So again, cash flow financing, merchant cash advances, 2 great ways to go there. And Elaine says, what about funding for expanding a bakery? All of these will work for the purpose of expanding a bakery as well. And Robert says, SBA microloans doable for new businesses? They are. It's the only kind of SBA loan that is doable for new businesses. So you want to look at SBA microloans, guys. A lot of people aren't tapping into this. You can get funding up to 50 grand, average credit, even as a new business. So that's something you want to consider. Now, of course, we can't talk about getting capital without building business credit, because business credit is the easiest of any of these things to be able to get money. And you do that by starting to improve your fundability. And a lot of training I have on our social channels you can check out about that. And guys, again, if you're getting value from this, hit the like button, hit the love button. It helps me get other people to be able to access this information and know how they can get capital to grow as well. So you want to improve your fundability. We've got training all about that on our other social channels. You also then need to start building business credit. Uline, Quill, Crown Office Supplies, Supply Works, and all their information is right here on the slide that you can go to. They sell all kinds of things you're going to want and need for a restaurant. And the nice thing is that you can get credit from them. Even if you have no credit, even as a startup restaurant, you're able to get credit from them right away. They report to the business credit reporting agencies. That gives you a credit profile. That gives you a credit score. And then you can use your newly established credit profile and score to then start getting all kinds of revolving credit. So this helps you a lot, because once you have at least 3, preferably 5 of those vendors, you can start to get all kinds of actual credit cards at stores. So think about where you're buying supplies. Maybe you buy stuff at Home Depot, Lowe's. Maybe it's Sam's Club, Costco. Maybe it's Amazon or Walmart. All of them will offer you revolving credit cards that once you build a handful of accounts on your business credit reports, you can get those credit cards from all those retailers without a personal guarantee, without a personal credit check. So even if your personal credit's horrible, you can still get $20, $30, $40, $50,000 limit individual credit cards from all those sources. You can also get fleet credit. So if you have catering trucks, if you have, vehicles on the road. So we were actually just talking here, Elaine, about expanding a bakery. So as a bakery, you might have catering trucks. Well, you can actually use fleet financing to be able to get credit cards to fuel that fleet. You can even use business credit to get auto financing to buy vehicles. So again, we talked about creating a delivery service. We talked about food trucks. We talked about, being able to come in and be able to have catering vehicles, be able to put stuff in your trucks and go out in the neighborhoods and sell them. A lot of things you can use commercial vehicles for. And with business credit, you can get financing to buy commercial vehicles. You can get the financing you need to fuel commercial vehicles, repair them and maintain them, all without a personal guarantee, all without a personal credit check. Pretty cool. So a lot of the money you need to grow your business, you could use business credit to get. It really gives you an opportunity to actually have your business basically fund itself. Okay. And Chili says cash deposits versus credit card receipts funding. Look, you can do both. And I don't know if that's a question or not, but it really helps you a lot to accept credit cards from your payments or from your customers. I always suggest any business should have a PayPal, Square, or Stripe account, one of those 3. You should let your customers pay through one of those 3. Some of the easiest money you ever going to get It comes from PayPal, Square, and Stripe. Some of them go up to $500,000. They don't care about personal credit. Their fees are low. Their interest is low. They just will lend you money based on what you have going through your PayPal, Square, Stripe account. So that's some more options we haven't talked about yet, but you need to make a way for your customers to pay, because that opens up funding. If you accept credit cards from your customers, that opens up cash flow financing and merchant cash advances. If you just accept cash from your customers, that only opens up cash flow financing. So accept credit cards, use Square, Stripe, PayPal, and that opens up the majority of funding options that you're going to find when it comes to cash flow and credit cards. And Chili says inventory credit. That's inventory financing. It's a great point because I haven't brought that up and we weren't planning on talking about that. But there is financing for inventory. Typically doesn't make sense for restaurants because it won't work for perishables, and restaurants have a lot of perishables. But there is inventory financing where you can get a credit line borrowing against existing inventory you have, or get the credit line that you need to be able to buy the inventory you need. So that is absolutely possible. Thanks for bringing that up, but not really not very common for restaurants because a lot of cases you don't have that inventory to use. And Robert says, when you talk about business phone numbers, you mentioned toll-free. How important is the toll-free piece? Well, an 800 number through GoDaddy, SmartLine work, that will work. And it's pretty important. Phone numbers, a lot of sources will deny you because you're not listed with 411 or that you don't have a phone number that makes you look credible. So if you can, it's very cheap and easy to do. Get toll-free, a lot more credibility than what you're going to find with a local phone number. So credit line hybrid, great for startups. It's credit lines you can get up to $150,000. Typically, you'll get about 5 times the amount of your highest credit limit now. So look at your highest limit credit card that you have not authorized user, yours. You can usually get 5 times that amount. 0% rates, no doc financing. You don't need financials. You don't need bank statements. You don't need business plans. You don't need resumes. You don't need any of that kind of stuff you need for other loans like SBA. You just need good credit, 680 FICO score or higher. And the nice thing about this is that you're able to get approved for credit line hybrid even if you don't have good credit by using a guarantor. Family member, friend, potential investor, somebody like that wants to be a guarantor, they can get it on this program. And the nice thing is a lot of these accounts you're getting report to the business credit reporting agencies. So they help you build your business credit, okay, as well as give you up to $150,000 in working capital credit lines at 0%, and you could take the cash out. Now, some of the qualification requirements is they want you to have less than 5 or 6 inquiries in the last 6 months. If you have more than that, it might be okay. You just won't get max funding. They want you to have less than 40% utilization. The lower the utilization, the more money that you'll typically get. And you've got to have some established consumer credit. You need to have at least like 2 accounts that are revolving that have been on your credit for 2 years or more, or a mortgage or auto loan. But you need to have some established credit because this program qualification is based strictly on your consumer credit. So you need to have established consumer credit to be able to get it. But if so, it's a great way to get money even as a startup business. Now, beyond bank loans, a lot of different ways you can get money. You can leverage stocks, bonds, 401ks, or IRAs. You could use inventory financing to get inventory. You could use equipment financing to buy equipment with bad credit, inventory leasing to buy equipment or to lease equipment with good credit. And you can also use equipment sale leaseback to borrow against equipment that you already have. We talked about purchase order financing as a solution if you have purchase orders that you need to fill but don't have the capital to do so. We talked about using business credit to access high limit store revolving credit cards you can use for a lot of purposes, even use it for auto financing, even use it to be able to get fuel and repair and maintenance for vehicles if you have catering trucks or other vehicles like that on the road. So a lot of different options there that you can get into. And we talked about some vendors that will help you build business credit as well. So we talked about, I don't know, at least 10, probably 15 different ways you can get money for your business. Do you need help? Well, then get in touch with us, 877-600-2487 or creditsuite.com/get funding. We never charge you a dime of money to help you with financing. Don't get me wrong. The banks will charge interest rates. They will charge fees. They roll that in to the loan just like they do with SBA. And we negotiate to get that lower for you. But, anytime you get money, you're going to pay a fee for that for the lender, but we work to get you the lowest fees with them and we don't charge you any money. So it's like we're a free resource to be able to help you determine all the funding you can get, where to go to actually get approved. So if we can help you along the way, let us know. We'll even help you understand the steps you need to graduate to SBA loans so you can get all the money you can get now, but then graduate to even the better loans out there as well. And Chili says, are business credit cards better than business loans? That's a good question. I don't think one is better than the other. I prefer revolving credit versus loans. The minute you get a loan, you got to start making payments on that loan. whether you're using the money or you're not. Credit cards and credit lines are revolving, so I can use the money and only pay interest on what I need when I need it. So I can get a credit line today or a credit card today and not use it at all and have no payments. And then 3 months from now, I can use only what I need to make payments on, pay it off and reuse it. So I prefer revolving. I think credit cards are the best way to go to fund a business, which is why we talk so much about business credit, credit cards and credit lines. And I think loans can help as well, but loans only really make sense if you have a specified use for the funds and you're going to use those funds right away after you get the loan. And Gordon from LinkedIn, thanks for tuning in from LinkedIn, okay? We're building we got a huge LinkedIn following, but we're building our live following on LinkedIn. Says, I'm a retired inventor, active investor. I watched your live yesterday. You had reached out to connect. It would be great to do a 529 plan talk for students, families. All right, well, let me know. You're connected with me on LinkedIn. So connect with me on LinkedIn, give me some details, and then one-on-one through the chat, I will definitely connect with you, and I appreciate that. And your website is dwaprep.com/financial-wellness. So thanks, everybody, for tuning in. If you'd like to talk more, give us a ring, 877-600-2487. Remember, on a call with us, 3 things happen. We do a fundability assessment to see how fundable your business is. We find all the discrepancies online that don't match with what you're going to put on an application. So we tell you you have problems before you apply and get denied. That way you can fix them and get approved. The second thing we do is we help you build business credit for your EIN that's not linked to your social. On that call, we'll help you get your business credit reports for free. It's like $250 from the bureaus. It's free for us. Okay, we help you get them. We'll go over them. We'll give you tips and tactics to build your business credit. And the third thing we do on a consult call is we tell you all the funding you can get right now. We talk to you about all the money you can qualify for right now. A lot of you can get money. You don't think you can. You don't think you qualify. One phone call will tell you all the money you can qualify for. All that happens. Again, you can look at our reviews online. People rave about what happens on a consult call. So give us a ring at 877-600-2487 or email us, info@creditsuite.com to set up a consult call. And if you got value from this, hit the like button. Punch that like and love button, please. Is the one thing I asked you to do. Hit the share button. And also make sure that you subscribe. If you subscribe on YouTube, ring the bell beside the subscribe button and click all to make sure you get notified when we go live. We go live Tuesdays and Thursdays at 1. Most of the time. We're not obviously going live tomorrow because it's Thanksgiving, and Wednesday at 11. And we also have daily tips on our Instagram, on our Twitter, on our Facebook as well. If you want to check out all of our social channels, it's at creditsuite.com. And also go to creditsuite.com/27 ways, 27 ways to access our funding kind of vault of 27 total ways that you can get funding for your business. A lot more that we didn't even get a chance to talk about today. That's at creditsuite.com/27 ways, or short for 27 ways. And that'll get you access to our funding vault with 27 different ways that you can get funding for your business. And don't forget, creditsuite.com/get funding. If you'd like to fill out a handful of questions, talk to our funding team. We'll talk about all the money that you can get now. Gordon, thanks for chilling. Thanks for the thumbs up. Chili, thanks for coming in. And Woodley says, so starting a food truck would qualify me for these loans? Yeah. Most of the financing we talked about today, you should be able to qualify for. Even with a food truck, a lot of these options will work very well for you. So if you'd like to learn more, give us a ring. You can also go to creditsuite.com/EIN, creditsuite.com/EIN, or creditsuite.com/live to get our free step-by-step guide on building your business credit. So thanks everybody for tuning in. I look forward to seeing you on our next training. We talk about more cool ways to get money for your business. Now you know over 10 ways to get money to start or grow a restaurant. So hopefully this helps you along the way. Chili says call us. If Chili says to call us, you need to give us a call. So give us a ring at 877-600-2487 for your free business credit and funding consultation. Thanks everybody. Have a great day.